This is part 3 of Accounting Grade 11, question 3. We are going to do 3.3, which says complete the balance sheet, statement of financial position. Where notes are not required, calculations must be shown in brackets for part marks to be given. We can start off with the empty balance sheet, and what we can add immediately as part of the calculations, we can have there the fixed deposit from Encore Bank. So we would add here the 200,000 Rand in the financial assets. We've got the debtors control, 111,200. So we can have here trade and other receivables. We can start with 111,200. Creditors control, we covered that one as part of note number 7. Then the loan from Money Bank at this stage is a question. We're going to get back to that one. Then we've got adjustments, sum of the totals, the interest expense, which we're going to do a little bit later. Interest income, inventories, we can put in as part of inventories. It's a final total, or we can write it here so long, 243,000. And then we've got our cash and cash equivalents, which is 199. So we start with 199,994. Carrying value of fixed assets of the end of the financial year, 3,596,000. So we can add that as well. 3,596,000. Provision for bad debts must be adjusted to 3,324. We are only busy with the balance sheet. Therefore, we're only going to deal with the part that relates to the balance sheet. So the provision for bad debts, what we can do is to go to our trade and other receivables. And part of trade and other receivables is provision for bad debts, which we subtract 3,324. Interest on fixed deposit still owing amounted to 7,800. So this is interest that they still owe to us, 7,800. So we can go and add to our debtors or our trade and other receivables, because we still need to receive it, 7,800. Thereafter, insurance prepaid, 26,400. Now this is insurance which we paid in advance. So this amount they actually owe us at the end of the year. So we can go here plus 26,400. Number 6 we dealt with in the creditor's note. Number 7 we dealt with in the creditor's note. Number 8 we dealt with in the creditor's note. Let's get to number 9. Interest on loan has been capitalized to the loan amount. What that basically means is we need to go and work out what is the interest, because they give us a balance at the start of the year. They give us the bank, which we paid back, including the interest, and they give us a balance at the end of the year. And then it's also estimated that 240,000 of the capital portion will be paid for the next financial year. To make a small T account over here, so this is our loan. So balance at the start of the year was 600,000. So we can write the balance 600,000. Interest capitalized. So we're going to write the interest, which we don't know. We know we paid an amount of 330,000. And then balance carry down is 360,000. Therefore, if we balance the account, that goes to 690,000 both sides. If we work out the missing amount here, that would go to 90,000, which is our interest expense. 90,000, which was missing. And our balance brought down would be 360,000. Therefore, we can do the following. Our loan from the money bank, we can start off with 360,000, which is our balance carried down, balance brought down at the end of the year. They say, however, 240,000 is payable within the next financial year, so we have to subtract 240,000, and we have to add that to the short-term loans or installment on loan, 240,000. Partnership agreement, all of this we dealt with in the previous question. All that's left to do at this stage then is to add up. So we've got here 3,596,000. We've got here 200,000. We add up 3,596,000 plus 200,000 gives us 3,796,000. So we take those two and add up. The current assets then, 243,000. The trade and other payables, 111,200 minus 3,324 plus 7,800 plus 26,400 gives us 142,076. Cash and cash equivalents is 119,994. Again, we add up all three and write the answer in current assets. Apologies, the correct amount here is 199,994. So we take the 243,000 plus 142,076 plus 199,994 gives us the value of 585,070. We take that one and that one, we add them up, 3,796,000 plus 585,070 gives us 438,170. That includes the total assets. Equity and owner's liability. We've got there the capital, the 1,800,000 and the 1,200,000. So in this case, it's 18 with 5 zeros plus 12 with 5 zeros gives us 3 million. The current accounts we worked out, or they gave us that total 719,060. 719,060. Then the total owner's equity works out to 3,719,060. Then we've got the loan at this stage, which is the 360,000. $360,000 minus 240,000 gives us 120,000. Trade and other payables, that one we worked out. At the top there, they give us 302,010. So we can write that in. 302,010. Bank overdraft is nothing. Short-term loans, we've got 240,000. We add them all up. The 302,010 plus 240,000 gives us 542,010. So those two we add up. Non-current liabilities adds up to 120,000. So we will take that one and that one and add them up to that one. So that would be the 120,000 plus 542,010 plus the owner's equity plus 371,960, and that gives us 438,170, and that concludes our exercise 3 or question 3.